Let's move on to our next presentation from Jeff Tompkins at Altus Capital. Jeff, there you are. How you doing?
I'm doing great, Jimmy. Thanks. And thanks for your generosity in pulling this group together. And Jimmy and I met in DC actually at a Novogradac Opportunity Zone conference. And I've just been enthralled to be a part of this community. And excited to talk to you today about Altus Capital's Opportunity Zone Fund 2. As Jimmy mentioned, we're closing that fund at the end of the month. But we have some exciting projects where, as Barrett had mentioned, we have some opportunity to backfill some already committed capital to the fund for those projects. And again, the idea here is to broaden our relationships with investors for future projects. Let's jump right in. I won't belabor the point. I think Jimmy did a great job. It is a great year for opportunity zone investments in terms of capital gains. We couldn't agree more. And I think Bear did a great job of talking about what's happening locally in the DFW market. Nationally, we're seeing, this shortage of close to 5 million homes and growing. And I think Axios did a great job with this chart on the left-hand side of the screen, which I would think is probably any developer's dream scenario, which is that big trough at the bottom right-hand corner, a huge deficit in the number of existing units relative to population demand. And of course, this is projected to continue through the end of the decade. We have to build over 4 million more properties by 2035 just to meet demand. This is driving up rent prices. We see a very healthy rental market moving forward, 3.5% increase in January 2025 year over year. Given this market, Altus Capital, which by the way was an early mover in opportunity zone funds, we're in our second fund now. We launched our first fund shortly after the program was enacted and signed into law. We really saw a need to develop a differentiated approach to opportunity zone investing. And to highlight that are kind of four key pillars of that approach. First, we really wanted to target high growth, opportunity rich markets with a potential for 3x returns. So, much like the Dallas Fort Worth market, you saw some of our investment sites in Charlotte, in Austin, also on that map that Barrett showed you, and we'll get into a little bit more about those specific markets. Second of all, we really wanted to capitalize on $1 billion plus proprietary pipeline of approved projects with proven operators, have good track records. So we have a very healthy pipeline, and the developers we've worked with in Fund 1, we've continued into Fund 2, and will likely continue into Fund 3 as well. Third, we wanted to bring access to differentiated, hard to access off-market real estate investment opportunities. So given our partnerships with developers and our ability to invest across multiple projects through a differentiated, diversified fund, we really want to bring unique projects. And I'm excited to share one of those with you in just a moment. And then finally, and this is probably the most compelling aspect of the Altus Capital approach for our fund, is that we wanted to construct OZ with multiple investments that could diversify relative to many of the single asset funds that are out there. So across multiple markets, across multiple developers, multiple property types, we wanted to diversify to really de-risk the investment. A little bit about Altus Capital. So we have a seasoned management team with experience across the relevant core competencies for the opportunity zone. So 25 billion in historic assets managed and advised by our management team at firms such as Citigroup, Bank of America, Merrill Lynch, and Man Investments. And specifically, the fund's investment manager manages and advises on assets in excess of $3 billion. In addition to that, the investment management property team for the fund have built over 7 million square feet of real estate assets to date. And in terms of performance, we consistently hit in the mid-teens. We project out a 3x multiple on equity, and happy to get more into some specific examples for folks who are interested. I'll be sharing my contact info in just a couple minutes. Let's drill down a little bit into why we think diversification is so important, how we think about that. we're really a diversified mix of what are for us high conviction properties. And we diversify across these three areas. On the sponsor side, we really work with sponsors that have a very robust balance sheet, billion-dollar plus balance sheet, developers that can manage whatever financial headwinds, market changes may have across the project. In terms of geography, again, we're looking at those high growth potential markets, but also markets with that trough dynamic where there's pent-up demand or demand exceeding supply, healthy rental markets, places where there is a high job growth. In Charlotte, which we'll talk about, North Carolina being one of the ranked a top place to work, like Dallas, you have very healthy market there. And then property type. We love multifamily. It's probably the most risk averse category, but people need a place to live. And we really look for properties that are also differentiated architecturally and spatially, properties that have access to open outdoor spaces, public parks, which we feel will contribute to their long-term value. So here are the three portfolio investments in OZ Fund 2 for Altus Capital. The first is Camp North End, Kinship, located in Charlotte, North Carolina. Here, we really like the developer Atco. It is a Charlotte family that has been investing in that community for over 100 years and has some really interesting history. I'll share that with you in just a moment. Valley Vista in Austin, Texas. Again, one of those robust Texas markets that you saw in the previous presentation. This one in particular is adjacent to the new Tesla Gigafactory, and we're seeing robust demand in that market with the job creation coming out of that massive megaplex. And then finally, the Bridge District Parcel 2, another developer we really like, Red Brick. This is an interesting property right along Public Park, and Red Brick being the largest owner in Washington, D.C., interestingly. All right, let's dive into Kinship. Kinship is a really interesting history to it. It was built originally as a Ford Motor Company manufacturing plant, rolling out Model Ts. Was shifted during wartime as a quartermaster depot, supplying training camps in the Southeast. During the Cold War, it began building missiles. Before 1975, it was shifted over to a pharmaceutical manufacturing plant. And then in 2017, Atco Properties purchased this 76-acre site. Beautiful site. It's a great property with tremendous amenities, luxurious living spaces, beautiful common areas, live work opportunities as well, and has done really well. This is a later stage project. It's currently in lease up. We expect it to actually be revenue producing about 50% by Q1 of next year, and for the portfolio revenue producing by Q1 of 2027. So if you're interested in learning more about this, you can take the next step. Again, what we're looking for is a confirmation of interest by March 31st. So we recognize that some folks are waiting by the sidelines, seeing what happens legislatively. Some folks have yet to make a decision on a capital gain. We're really looking for confirmation of interest. That's what will allow you to participate in Fund 2. That would mean 180 days after the gain, you'd need to invest by September. This is a $250K minimum, and the added enticement that we're offering is an 8% increase on our preferred return. So our typical preferred return being 6%. Here's my contact information. You can reach me via email at jefftompkins@altuscapital.com. You can schedule a meeting directly on calendly.com/altuscapital. And my cell phone number, if you want to text or call, I'm your investor relations point of entry into Altus. And you can scan that QR code. Thank you, Jimmy, for the idea for that. If you got addicted to that during the Super Bowl, I like using them now too. And then I'll end, Jimmy, by saying that we do have a report out that we have recently released about what we see as the real benefit of opportunity zones. Most people think it's the tax deferral, We actually, in our research, have seen that the real benefit is that 10-year hold, which leads to the tax-free gain. So happy to share that report with folks as well.
All right. Awesome. Jeff, I just scanned your QR code to take me to your calendar. So that seems to be working. We've got a few questions. We got about 3 or 4 minutes for questions. So first question from Scott here. Scott asks, and he admits, newbie question, although I don't know the answer to it. Once the property cash flows, do you distribute the cash flow or distribute? I'm not really sure what the question is. Maybe he's asking, is it, do you do a return of capital or is it cash flow distributions? How does that work, and how is it taxed if you know?
Yeah, no, that's a great question. And this is, I think, the exciting thing about jumping into Fund 2, right in the lead up to the close is that we have income producing properties. And there are, tax benefits to the income that is shut off of those properties as well. Scott, I'd be happy to get into actually some specifics. Given that we're in lease up with Camp North End, we're actually in a great scenario where we'll be handing back income to investors. So feel free to schedule some time with me, and we can get into some of the specifics about what that will look like for OZ Fund 2.
Right on. We got a question here from Mike. He says, so this would be up to 250, but only in gains, question mark. So I think he's responding to your minimum investment of $250,000. So Mike, yes, your minimum investment amount is $250,000. You can invest more than that if you want. And then if you want to take full advantage of the opportunity zone tax benefits, you should make sure that they are gains dollars that you're rolling over within 180 days into Jeff's fund or some other qualified opportunity fund. You can put non-gains dollars into a fund. Just know that those non-gains dollars are not at your individual LP level eligible for any of the preferential tax treatment. Did I get that all right, Jeff, or any modifications there?
Better than I could have answered, Jimmy. The only thing I would add is that, we do work with a lot of wealth managers and RIAs. And so we have examples where there are individual clients who don't have the 250K minimum investment amount, but their advisor may have a set of clients that roll up over that minimum amount. We're happy to have a conversation around situations where an individual investor doesn't have a gain that crosses that 250K minimum.
All right, we got time for, I think, 2 more questions here. First one from Tali, who asks, will you invest in all 3 of these projects equally? Or if I put in 250K, is it just for one project? Or how, I think this person's asking, how does their investment get distributed across these different projects?
Yeah, that's a great question. So I think given how much hype and attention Camp North End has gotten, there's a lot of demand on that project on the investment side. The short answer is we'd love to have a conversation with you about it. We have some flexibility in how we can allocate funds in Fund 2, and there are a couple different options there. So I'd recommend, either shoot me a text or an email, or happy to, you can schedule directly as well. And we can quickly walk you through what some of those options are.
Good stuff. Okay, last question here. I'll ask this one from Brad. I see a few other questions in the Q&A section. I think those may have been pertaining to the previous deal, though. But question here, Brad says, Altus. So I know it's for you. Apologies got pulled away. Let's see. He says 2 questions. 1, how are you dealing with cost overruns? Is the developer responsible? And where does that fall in the waterfall? And then 2, second part, what is the waterfall of returns to investors versus promote to the developer?
Great question. So question number 1, yes. And happy to report that the projects are under budget, and there are developer restrictions there in terms of what overage would look like. And then second, in terms of the waterfall, I'm happy to share a copy of our prospectus, which actually goes into all of the terms. As I mentioned, there is an 8% preferred return at coming into the fund at this stage as an enticement. So we have forward visibility into allocations. And again, that's not an actual funding of the account. It is a commitment with an intention to invest. And you would then have until September to actually make the investment.
Good stuff. Well, we have run out of time for this segment. I have to move on to our next presenter, but Jeff, thanks so much. First time OZ Pitch Day presenter. You did great.
I always
Hope
hope I
to,
did all right. Thanks, Jimmy.
you did great. Yeah, hope to see you back for many more of these to come going into the future. Thanks, Jeff.